All right. I'm going to go back to the bond market. That is something which we need to understand because ultimately we are trying to understand both liquidity, cost of borrowing, and how vibrant the Indian bond market is. Vikas Hallan, Senior Vice President, Corporate Finance Group with Moody, joins us now. Vikas, good morning. Thank you for joining us. Let's first understand where the bond markets are. The bond yields are not really indicating that we are are actually indicating that we are in a liquidity crunch still. Even though liquidity is back, that's what RBI is maintaining. The bond yields, both in the corporate bond market and the government market, are stubbornly resilient. Why is that?
I mean, the bond market would react to a lot of factors, not just RBI interest rate cuts. There is globally, we are seeing investors are staying on the sideline. We are seeing that investments in credit is a bit circumspect. And it's all playing out similarly. It's not just the central banks cutting down rates and having transmission immediately. On top of that, you have expectation of credit risk. You don't know how sound a company is in terms of liquidity, and therefore you add a lot more premium over and above the risk-free rate, and therefore the rates are not getting lower.
Okay. Wanted to take the discussion to, the big event which everyone in the market is waiting out for, divestment, and wanted to understand how is it that you're rating assets of Indian refiners right now. It seems that, or at least that is our exclusive, one of our reporters broke the story that BPCL roadshow is going to begin this month itself. Do you find a lot of foreign takers for BPCL assets?
Yeah, BPCL is a very interesting asset because it's quite unique that it has got a very large chunk of emerging market share. When you look at other big emerging markets like China or Latin America, they already have their national oil companies, and there is no, at the moment, plan to divest. So if you are a company that has got a large upstream production, and if you look at environmental risks and carbon transition risk over the next 10, 20 years, BPCL is very attractive for those companies who want to ensure that they have access to a market that is going to continue to consume oil in 20 years. So BPCL would definitely get a lot of interest in terms, but there are a lot of issues that needs to be resolved before the actual sale happens. So government has already mentioned that they're selling or hiving out the Numaligarh refinery from there. But the couple of other pieces that I would think a buyer would need to look at before they make the decision. One is BPCL's stake in Mozambique, whether somebody coming in would want to buy that or would they want to sell it off. Then you've got the whole LPG business, which is actually still subject to subsidy. If a private player comes in, why would they sell LPG at a subsidized prices? Why would they wait for government to give them reimbursement? So the government needs to untangle that web effectively. Also, BPCL has a lot of bonds outstanding which have a change of control clause. So they need to be addressed before a buyer can come in. So it will take a lot of time, in my view, before we can actually see the execution happen.
The other thing is, we don't know whether we have a clear hang of the oil policy, the fuel retail policy. When there is a state election, no hike. When there are no state election, free hike.
Yeah.
Is that going to be the biggest deterrent? Because there is no...
You're right.
There's no rule written in the stone.
Absolutely. I mean, that is one of the things that we could possibly see as a fallout of this, privatization, that the government will possibly take their hand off the pricing policy. They will not probably guide the oil companies going forward if the privatization actually happens, because you can't have 30% of the market pricing it at a higher level and the 70% of the market which will be controlled by the government at a lower price. That is something that they would not. So whoever is buying it would go into that diligence process with the government as to how that will pan out.
What happens after BPCL, HPCL, ONGC? The government recently saying they don't need to be in the oil business, or that the government has no business being in the oil business. So how do you see things really evolving?
Yes, it is positive that the government is trying to get out of the oil business. But if you look at emerging markets, the governments continue to remain in the oil business. None of the Asian companies that we rate, or in the countries Thailand, Indonesia, Malaysia, the distribution is not yet privatized. the distribution is very much in the hands of the government. So India is going to be pretty much an experiment where the distribution goes into the private hands, and it will be interesting to see what happens. But after this, it will depend a lot on how the BPCL disinvestment actually pans out. HPCL happened, but it was just sold to ONGC.
Right.
But if you see 5 years from now as to how BPCL pans out will determine the future trajectory of government policy on oil and gas.
What about the health of upstream companies like ONGC, given the rebound and the 3-month uptick that we've seen in crude?
So most of the upstream businesses are doing well. $60 and above is a very decent level for oil prices. For ONGC and Oil India, for example, there is one added benefit that the government has not asked them to share any subsidy burden. So that means that their net realized prices at $60 is much higher than the net realized price when oil prices were 120, because they were sharing $60, $70 of subsidies. So their health remains pretty good. But we need to also look at what is the shareholder return, because the dividends have been going up. The government has been asking them to do share buybacks. Also, if you look at the DIPAM guidelines, these companies cannot maintain a large amount of cash. Otherwise, they will need to do share buybacks. Mm-hmm. So it's a bit of an issue from the balance sheet health. These companies used to have a lot of cash relative to their debt, and now their cash relative to their debt has been coming down significantly. So from that perspective, the balance sheet health is weakened, but operationally, they continue to remain healthy with $60.
Oil, some would argue that when you're raising a long bond, 10-year bond, 20-year bond, 30-year bond, that's how these bonds are. That's the good part with some of these companies. They're backed by the sovereign.
Yeah.
And you can raise 10, 15, 20-year bond. But the change in last 5 years has been that the oil sector is getting disruptive, whether it is EV or shale gas. Do you think for someone who's now looking at raising, or any of the oil marketing companies in India who are looking at raising long-term bonds, they may find it difficult? Because the borrower or the lender in this case would say, I don't know whether we need electric cars or we need fossil fuel cars. Do we need combustion engines? Do we need electric engines?
Very, very interesting aspects to the oil market, and that is something we are looking at over a 20-year horizon as to what's going to happen. EV is a very small portion of the total oil consumption. And you still have oil being used for petrochemicals, oil being used for aviation, and large transportation. EV substitution has been very, very slow.
In China?
Yeah, it's not taking off demand. It probably is slowing down growth.
Okay.
We still expect that the peak oil demand is not going to be reached before 2035 or 2040 even, on a global basis. On emerging markets, this could actually be even beyond that. So India is expected to continue to grow, even though we have April to October as a bit of an anomaly with only 1% growth, but in the past 5 years, it has been growing at 5%. So oil consumption continues to grow. Whereas if you look at investors, if the horizon is 10 to 20 years or 30 years even, we have seen oil companies doing bonds in 2019 which are 30-year.
Exactly,
and
that's my
even
point.
Just recently, PTTEP in Canada did a 40-year bond.
That's my point.
So investors are not yet worried about oil being substituted, because what will oil be substituted by?
This is what amazes me. One side, I've got this chain of thought which is saying, look, oil is going to be disrupted. The old refinery is going to become junk.
Yeah.
The new technology is going to take over. The way we drive and the way we commute is going to be different. Yet the bond market, you can go, if you're a good quality oil marketing company or an oil refinery or oil exploration company, which is very important, you can raise 10, 20, 30, 40-year long-term money.
Because if you go higher in the value chain in the oil, the risk becomes a little less from an ESG perspective. Because if you look at just purely crude oil producer, yes, the crude oil has not just the transportation as its use. It also has got petrochemicals and other stuff. And that doesn't get substituted. But if you go to refinery level, because there's a lot of diesel, if there is EV, then diesel consumption get disrupted. So if you go further down, then you can expect that disruption. But if you go further up, or even in natural gas is more cleaner than crude oil.
Yeah, which brings me to Aramco then, and their call of going from oil to chemicals, for which they're also looking at Reliance Industries and perhaps BPCL as well. How would that play out?
Yeah, so as I said, Aramco is looking to diversify from just oil. And if you get into petrochemicals, you are going into a non-polluting part of crude oil consumption, because crude oil's application on advanced plastics, not just single-use plastic, which is not, Reliance doesn't produce single-use plastic. So Aramco is picking its targets very carefully. Aramco is not just investing in India, it's investing in, just invested in Petronas in Malaysia,
Yeah, a lot of
done in
other Asian
Pertamina,
refineries.
and they're doing in Korea. So Aramco is spreading its presence globally, and especially in emerging markets where they know that the demand is
What
going to
did
be
you
there.
think of the listing, the possible green shoe option also coming up?
Yeah, I mean, just the first step. I would say from an Aramco perspective, it doesn't move the needle that much. Yes, it's now a listed company. There will be a lot more information available, but this is not the end game. In my view, there is going to be a subsequent offering at some point when Aramco thinks, they're ready for it. That's going to be the bigger part.
Okay, all right. Thanks so much for joining us
Thank you
today.
for having me.
much.
Vikas, and running us through your take on the oil and gas space.